Hey, everybody. Welcome back to The Smattering. I'm Jason Hall, and we are going to be talking about a fun industry. We're going to be talking about the electric vehicles industry. Before we do that, though, just a couple of things. First of all, if you like what we're doing, Jeff and I, please click on that subscribe button right there below us, and please check out our podcast. However you get podcasts, please check them out. Also, just a quick thanks to our friends over at The Motley Fool. We have a great partnership with them. They sponsored this video. If you'd like to get The Motley Fool's next 10 stocks, best 10 stocks to buy right now, go to our link, fool.com/thesmattering. Check it out, and we'd appreciate that. Okay, Jeff Santoro, we're going to talk about the EVs industry here.
We are. So when I think electric vehicles, obviously the first thing that comes to mind is Tesla. They've sort of defined the space, but anyone who watches the industry knows that pretty much every other manufacturer is either heavily or starting to invest in electric vehicles themselves. Plus, we have all these other electric vehicle startups like Rivian and Lucid and others that, a NIO in China. So there's a ton out there. So I guess my question to start off is, if you're a shareholder in any of these companies, these new electric vehicle companies, or even the legacy automakers that are stepping into this space, what should the expectations be for future returns? What should shareholders be thinking as we go into the future?
Yeah, I'm going to share a chart here real quick, Jeff. I think this is kind of useful. So a lot of investors might be looking at this chart over the past year and be thinking like, okay, on a market cap basis, just basically the entire industry is down pretty substantially, right? So if we look at it on a percentage basis, we're talking about stocks that from their highs are down from 43 to 80%. The thing is, I think that's the wrong way to look at it. But before I get into, Jeff, what I mean by I think it's the wrong way to look at it, is there a couple things about the auto industry I think are important. And number one, I do think we are absolutely in this transition to electrification. What I struggle with, Jeff, is taking that reality and saying, okay, yeah, so an electric vehicle is actually less complex than an internal combustion engine vehicle where you've got hundreds of moving parts and the engineering is more difficult. And an electric motor can actually be relatively cheap, right? And really powerful and really energy efficient, and get to the idea that all of a sudden this industry is going to be really, really profitable compared to the profits that the automotive industry has generated in the past. Now, yeah, I get it. There's other stuff that people are touting. So like autonomous vehicles and things like fleet management, where less people own cars and we have more cars that show up when we need them and we get in them and drive them. And the NIOs and Lucids and General Motors of the world can make a cut from like managing those fleets in really high margin businesses. And to some extent, I think that's going to be the case. But here's the thing that I wanted to stress. And I don't even want to just talk about the Lucids and the NIOs and the Rivians of the world. I just want to take a look at Ford and GM, okay? Now, this is their stock price. I'm going to take a look at their enterprise value, okay? So this is the company. If you were to buy the company today, you're going to have to assume it's debt. You're going to inherit the cash. So it's the market cap of the company plus the debt minus the cash, right? So it's the buyout price of the company, basically. And you look at Ford and you look at General Motors, even these legacy automakers that are expected to be ceding market share, right, to the NIOs and the Lucids and the Teslas of the world, are trading for, again, adjusting for that peak valuation, that bubble valuation we saw over the past year and a half or so, are still trading for some of the highest valuations they've traded at, some of the highest market caps. So even if we adjust out the debt, they're trading for some of the highest valuations that they've traded at in a very, very, very long time. So there's this idea that I get, that I wholeheartedly support, that EVs are going to become dominant. I just have a tough time applying the idea that the entire industry is going to become more profitable, and even these biggest players right now are going to become more profitable just on the idea of this shift to EVs. Here's the biggest framework around the reasons I'm concerned about even after the sell-offs that we've seen, the valuations that these companies still trade for today, is if you look at the automotive industry for 100 years, It's very capital intensive, meaning that you have to take a tremendous amount of the cash that your business generates or go raise debt or sell more of your stock to raise cash, and you're constantly having to reinvest that capital into upgrading your factories. It's a constant churn that you have to do because you are competing against everybody else that's making the same product as you are. Then you're selling that product into a consumer market, right? So you're selling it into a market that is very cyclical. Consumer demand is always very up and down, right? And you're competing largely on price. Prices continually get squeezed, so it's a bit of a race to the bottom. And the ones that are at scale are the ones that typically win. Jeff, my biggest fear is that there's a lot of investors out there that see this massive trend, this real trend of vehicle electrification, and see what Tesla has done, stock that's now worth almost $950 billion and has traded for over $1 trillion in market cap in the past, and think that they're going to find the next Tesla. And the reality is, whatever happens with Tesla going forward, whatever the next Tesla is, it's not going to be an automaker. It's going to be in some other industry we're not thinking about, and we don't know about what it is yet.